Good morning, traders. Here we are on the on my E-Trade. We're looking at Kingston Wireless Info, ticker symbol KONE. Today is Friday, the 10th of July, and the market. Well, let's pull up the market, see what the market looks like. The market has gapped up significantly again. It's kind of what it's been doing, putting in this looks like a dragonfly doji off the 200-day simple moving average, still underneath this area right here. This support is now looking like resistance, so we might catch a little green up to this level. So today might be a green candle day. It's hard to say. Back to KONE. My rules dictate that I trade the highest volume stocks, being the summer months. The volume has dried up, so you gotta be very selective of the trades I take. I'm looking at KONE here at $6.50 for a buy. Reason being, because if you look on the daily, as Alexander Elder suggests, oh, this stock is really running. Hold on, ladies and gentlemen. It is market open and this stock is running. I'm gonna put a buy order here. I am gonna wait till 640 actually. I probably should wait for a trend to develop, but no guts, no glory. So I'm gonna wait for 640. Hopefully it dips 640. So I have 200 shares at 640. I got an order open, and then I'll stop at 630 if it doesn't do anything. So let's see what the stock does. The news out on KONE, as I was saying, the first 6 months of the fiscal year 2015 unaudited financial results confirms its previously announced fiscal year 2015 revenue and net income guidance. It says here the first 6 months is up 132.9% to 8.5 million from its first 6 months. Gross profits in the first 6 months of the fiscal year 2015 up 395.7%. So this is an earnings winner. Timothy Sites, if you guys follow that guy, he buys earnings winners, and I guess this would be considered an earnings winner. And the fact that it gapped up, previous close was right here, $4.50 to $6.50, a 50% increase. Now that's saying something. So you see, the reason I put my buy order was because if resistance now becomes support, this healthy stock should come back, retest, and bounce up. Also too, if we look at the daily, the SPY has also gapped up. Let's see if it catches its previous day's open as support and catches a bounce. There might be a whole day of red. So we'll keep an eye on our stock here. ICLD trying to do something too. It's doing the same thing as the market. So we'll keep an eye on our stock here and see what it does. So a lot of the times, the way I play the stocks is I'm a bounce player. So I think a newbie trader probably would just buy anywhere, probably even market order. I used to do that. I've only been trading for about 3 months now, 4 months, and I always set market orders. I didn't know any better because that's the first option they give you when you go to buy a stock. Well, and then when I first started, I started off my bank account off of banking. Had a broker from my bank brokerage account, and you can add in short from a bank brokerage account. And I didn't know any better, so I was setting market orders. I started trading when GENE, Gene, was blowing up. You guys can remember that was probably a while ago. And I had some success. I had no idea what I was doing. I would just kind of read the message boards and buy. No idea where to buy, where to sell, none of that. An experienced trader trades differently. An experienced trader follows the trend. He follows the breakouts. He follows the chart, volume, news, the overall direction of the market, all those things. It's possible KONE could sit down all the way back down to 450. Maybe it would have been more prudent to play this stock by shorting at high of days and waiting to exit down at yesterday's close. But I'm a bounce player. This is the strategy I play. So I'll 630, 640, stop on quote. So I got my order ready to go. If this stock starts to move fast, I might not be able to get out of it in time. I might lose more than $60. So that's a risk I gotta take. So my initial entry I thought would have been 650, which would have been right there. But looking closer at the daily, 640 seems more of a seems more like a realistic entry. Uh-oh, we might have missed the bounce here. Maybe. Nah, this has happened to me before where I think, oh, I picked the wrong entry. It's going against me. Let me buy it now. And then that sucker comes down and sinks lower. So I'll keep an eye on it. Still hoping for a 640 entry. I'm hoping for a headache-free trade. I'm hoping to come in at 640, out at higher days 740 for $1. 200 shares would be $100. Would be $200. That would make up my last 3 trades of losses, putting me green on the week. So I'm very hopeful. I'm optimistic, but also too, I will guard my money. You want to be a good trader, you got to be willing to take risk and cut your losses. So watching the stock here, and it looks like bulls are trying to buy it up. Unable to hold. Stock about to break low days. Because if you see here, This is actually the market open. Market open with 230,000 volume coming back in from time to time. We have now been market open for 10 minutes, and the highest volume on the NASDAQ is this stock right here, KONE, at 680,000. That's low. There's been moments when stocks have been 10 million volume by this time. So it's possible this stock can move real fast right now with such low volume. And I'm looking at the market off on my other screen, and its gap up is testing lower days, breaking lower days here. I'll show you here what's happening with this buy. Low day was right here, trying to break through. Breaks through, we could see a red candle day all day. So let me keep an eye on KONE here. I have a feeling, since KONE is doing the exact same thing as the SPY, that it would be prudent to follow the SPY right now. It could be that this stock will have a red day and there will be no bounce. But if we're going to catch a bounce, we're going to catch it off this 650, 640 area. I don't want to buy it any lower than 640. Minutes into, close to 15 minutes into the open, and our stock KONE is testing low of days. I try to find a trend right away, and the trend changes. This is kind of early because this stock can very easily go up, lower high, and then I'll have to change my trend line. But right now, I'm going to use this as a trend. But look what's happening to the wicks, guys. It's being bought up 20 cents every time. The market is saying, too cheap here. I want it. Wants to come down. Nobody, oh, people want it. It's too cheap. That's too high. That's too cheap. It stops. Now the market is saying, you know what's probably happening? People are finding about, they're waking up, they're hearing KONE news out. It's up 50%. It's up 50% on the day. Let me put in a buy order. People are putting in market buy orders and limit orders, and they're buying right now. I'm assuming some of these people are going to become sellers, and there's going to be some people maybe even coming in late. KONE putting in a healthy curve here. I might have missed my entry, but I'm gonna hold strong. If I don't get a fill, I just won't trade. Market putting in these big indecision, these call them hammers. Hammer, hammer, a little bit of a big head hammer. These usually happen at the bottom of a trend or at the top of trend. See how this curves up, testing high days here. Let's see, high days right around 719. So it hit 719 already and was sold. Pressure now. If this breaks 719, next place would be 770 up here. And if that breaks, then it could go as high as 850. A nice little indecision candle here, doji. I'd like to see it quick wash, 640, take me out, shoot up. But this stock is talking, and what it's telling me is that people were not willing to pay more than high of day of 719. Sold into, still heavy selling pressure. Look at the SPY. SPY doing the same thing. SPY actually broke low days, so it's a risky trade because this stock is following the market. And if the market broke low days, that's usually a negative sign. Not always, but usually. So now we're 18 minutes into the trading day, and I'm yet to be filled. Sitting here waiting. The market having a red day after a gap up. A big gap up. What I imagine is happening is people that were in this stock said, hey, I'm in the money, I'm gonna sell some of my shares and cash out, giving you these candles. There's people trying to trade and they're like, hey, I'm gonna buy. This thing is gonna go higher. And it's giving you all these indecision candles here. It's giving you a lot of sell pressure, a lot of buy pressure. But overall, the trend is bearish. It's starting to get pumped now. This always happens. A trick I use for when my heart starts to race, I get a little excited, is I take deep breaths, control your heart rate, control your emotions. The more oxygen you get to your brain, the more you can think clearly. Really strong to my 640. I really want to be in the trade right now. But my philosophy is you don't get in the trade where you believed you should have been at your best possible price and you shouldn't be in a trade. That's where they say having a plan. And if you guys remember, the plan was looking at a higher time frame, like Alexander Elder says. I found these tops here, 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 and the saying is support becomes resistance, resistance becomes support. So if that is true, then this area right here that was resistance in so many places will now be support. We filled. We're in the trade. Now to see if my initial idea was correct. 640 holds as support. theory behind this, guys, is that if this stock cannot catch a bounce off the 640 like I originally believed, then that means that the resistance is not holding that support, and there's no reason to be in the trade. This might be a tight stop, but I got a small account and I gotta protect myself. So I'm in at 640, potentially gonna be out at 630. I'm hoping to see a giant red green candle. Maybe up to 680, hovering here, and then going to higher days up here in the 760s, 770s, ideally. And it's possible that I might be taken out here, stopped out, and my original idea comes to fruition. That's very possible. No sense in being aggravated. That means I was right about my original idea. It's just the market decided to pull stops and take off. Not a big deal. It's part of trading. Nice looking bottoming doji. Green candle. Saying the market has found buyers. Sellers have stopped selling. This 650 area is an area of interest because the market usually goes to half and whole dollar amounts. Bounce play is here. It wants to test the 650 area. If 650 can break and then hold, then 650 will become an area of support. But right now 650 looking like an area of resistance. Small, big candle, medium candle, reversal. Well, it's not a reversal till it breaks the previous high. So this candle here would have to break this high of 650, 648. So this candle would have to close above 648, and the next candle would have to break above that. So far 640 has held. If you look at the bottom of these candles, it's right at 640. The most recent candle is trying to close below that, signifying weakness. You see that line that kind of hovers there? So my initial idea was correct. These candles just have to close above it, stay above it, get buyers interested, and then go up from there. KONE, putting in a reversal candle. To me, what indicates a reversal candle would be closing above the previous candle's high. So the previous candle's high was 645. This candle would have to close above that. And also too, we go by the fractal chaos, not to look that trader's name up, but this would be a fractal. So these two, this would be the middle finger, lower, 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 and up being sold into 640 is holding. This is healthy, guys. Stocks will come to an area of resistance when it becomes support, and they will healthily grind up. But if you saw here, it did that earlier too, kind of curved up, down, curved up, down. That might be the trend, in which case there's no need to be in the trade. If you're long bias. Now if you're short bias, you should have probably put an order here when you seen this sucker moving and gone short at about 750. Right now you'd be green on the day. Okay, his name is Bill Williams. If you guys are interested, there's a YouTube video out there on the subject. It's a webinar. It's about an hour and 20 minutes long, called The Practical Fractal, The Holy Grail of Trading by Bill Williams. If you guys are interested in that, that's the name of the video. Fractal trading. It talks about chaos, that there's fractals in chaos and that the market is chaos. And a fractal being a 5, the highest in the middle, and then 2 lower ones. So if you catch a fractal at the bottom, then it'll go up. You can catch a fractal at the top and then it'll go down. So I'm hoping that this is the middle finger and the fractal is forming here and it's going to go higher. I was green on the trade up here. Nothing to get excited about. But you know what I have been noticing lately as the market is bouncing? But because there is so much bull, so much bearish. Oh, see, it did catch a bounce. But because there's so much bear selling and bearish in the market, that the bounces are mediocre. So it's possible I was right and was prudent to exit here. But $20 is not enough for me to be excited about. So I'd rather lose 30 or lose 60 than make 20. That makes sense, maybe not. So what I did, I moved my stop up here to 638. Because if this stock ain't worth this shit, it'll let me know. Because it bounced off the 640 like I thought. Wasn't able to hold. Came back down. And also too, it's kind of prudent because here's lower days. You know, I am out of the trade now, guys. 638 for a loss of $30. $30 fits my 2% parameter, never risking more than 2% of your capital. My stop down here at 630 would have been twice that amount. That would have been $60. I'm bleeding money here, guys. I'm losing $690 a week. But here's the thing. I'm a bull in a bear market. I expect that. It did what I thought what it would do. It bounced off the 640. Just market is bearish right now. I should have exited out here for $20, but I'm trying to make 200, not 20. Sticking with the plan. I have no problem losing $30 a time if one of these times I'm right and I make $200, $300. That $200 win today would have made up my last 3 losses and I would have ended in green on the week. The problem is that I cannot short because of my account size. You guys get to experience that live. See? Because the market here is bearish. Come on, sucker. Bearish, 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 bearish. Look at the daily. Red, 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 red. It might be that it'll catch a bounce off this area right here. But there's no way to know. KONE was a little bitch today. I was in the trade. I was out the trade. A loss of $30. No big deal. Like I said, guys, it's possible that the stock might still come up here to 660, 670. Maybe even 619, 620 here. Ideally, that's where I would like to have gotten out. In at 640, out at 720. 719 actually. I'll come back and I'll check this stock out, guys, and see what it did, and learn, see what I did wrong and see what I could have done differently.
Okay, so here we are. We're gonna speed it up for you guys. We're going at about 1,000 or 2,000% faster. These are 3-minute candles and they're coming up like to a second. But as you go watching this stock, you see that it's clearly putting in a downward trend, just the way it did in the beginning, where it'll scoop up, fall down. It'll kind of round up, fall down, round up, fall down. So this stock would have been probably in hindsight better to have short uh, right off the jump, and ideally because we are in a bear market, seeing as how the SPY, as you saw in the beginning of the video, has been going down, down, down. So trying to long a stock is not your best play here. Now, if you see the 50-day simple moving average came and met with the stock broke below it and stayed below it. Obviously, because we're in a down market, the 50-day simple moving average is not holding that support. Matter of fact, it'll probably turn into resistance. So I followed KONE today because it was the highest percentage gainer, and as you'll see, boom, right here we kind of bled out what we broke previous swing lows down here, and this is obviously a red candle. This is obviously a red day. There's still money to be made in the market. You just gotta be a little smarter. Instead of buying, going long and selling at a higher price, if your account permits it and you got the guts and the knowledge, you can definitely short the stocks. So this stock finds a bottom down here, and we're close to we're up here. The volume is so dry. Look at these candles. These are 3-minute candles, by the way, and they're only moving like 2-3 cents at a time. There's just no volume. See, so we're at about 1,400 hours, which is about 2 o'clock. So at this point, there's about an hour left in the market. Candles start to kind of want to curve up. It meets the 50-day simple moving average. It's holding as resistance at this point. There's about 30 minutes left into the trading day, and either people buy towards the end of the trading day or they sell their position towards the end of the trading day. So you either see a quick dip down or a quick green candle upwards. So it's trending along sideways with the 50-day simple moving average. Candles are still pathetic. There's just no volume. And as we approach close, we start to see a couple of buyers, and they get sold into. Comes back down, meets the 50-day simple moving average. Tries to get some more selling, some buying, I mean, and then they get sold into. Okay, so here is the daily, what KONE looks like. You see a big red candle closing way below its open. And coming up is the SPY. As I predicted, it was a green candle coming up towards resistance. And here we have the SPY intraday 3-minute candles, and as if you can see, it actually did catch a bounce like I had predicted and ended up strongly. Good day for the SPY.